Bitcoin plunging by almost 30% to $31,000 earlier today, raising all of its gains since Elon Musk first announced Tesla's investment back in February. We are off the lows, though, of the session. You were looking at a nice V there. Julian Emanuel, BTIG Chief U.S. Equity and Derivatives Strategist, joins us now. Julian, questions twofold. Why the sell-off in Bitcoin, and does it spread to other asset classes? How do you play it?
Well, it's already spread to other asset classes in a low-grade way, let's say. But look, what people fail to understand is that the newness of digital assets, you're talking about Bitcoin as a 70 volatility instrument. Very few people have experience trading a 70 volatility instrument. And here's the perspective. When BTIG launched coverage on digital assets in November of last year, Bitcoin was trading 18,000. We said there was a $50,000 price target. People looked at us with rolling eyes. The very same people that thought we were being too bearish when Bitcoin hit 64,000 a month ago or so, and the same people we believe that are actually liquidating right now. So you just have to understand that with the evolution of this technology, and it really is as much about the technology as anything else, you're just going to have immense amounts of volatility, and you've had it looking at price history.
Julian, can you just walk me through the mechanics of what is happening here in terms of that low grade, as you say, relationship between what is happening in crypto and what is happening in other asset classes? How much of this is on margin? How much of this is institutional? Will institutional be there in terms of hitting the bid? I'm just curious as to what you observe in these markets right now, because you came in this morning, Bitcoin has led. There is a connection, and it's stronger maybe than a lot of people would have thought that it would have been.
So the thing that ties it all together, as you alluded to a moment ago, is margin, okay? If you look in the equity markets, the level of margin debt is at all-time highs, not coincidentally to the S&P 500 being at all-time highs. In our conversations over the last 24 to 48 hours with regard to crypto, what we're seeing is some of the institutional people that we talk to whose average cost basis in both Bitcoin and Ethereum is substantially lower than we are now, are looking for places to add. We think this is very much a latecomers to the party, whether you got in because of the effects of social media, driving Bitcoin up from 40 to 65,000, and then the effects of social media driving it back down. Those kinds of people are going to be liquidating. Now, the fact is that we're so close still to the all-time high in the S&P 500 that you've only just seen sort of, again, a low-grade spillover into speculative assets. However, if the market continues to build on this discomfort that the Fed is losing the narrative with regard to, controlling prices, that could accelerate.
So let's get to that, because reading research overnight, the sell-off into the close yesterday was being blamed on this. We're seeing inflation. The Fed's not going to do anything. We're going to run too hot. That obviously got eclipsed today by the Bitcoin sell-off. So what's the danger here? The ECB highlighted it very, very concretely. How do you invest in an overheating economy that the Fed's going to ignore?
Well, I think you have to. This afternoon is going to be very important. What the Fed minutes say and how the market reacts to them. Our suspicion is that they're going to continue to emphasize the word transitory, okay? And we think that's probably not the right thing to do. We think the thing to do is for the Fed to acknowledge that in an economy that's growing 6, 7, perhaps even 8%, where financial conditions are the easiest they've ever been, and inflation expectations are beginning to get embedded and actually causing asset price pressure and economic slowdown at the very margin. Yesterday's housing starts a point in case, is that they need to acknowledge that this is an issue. And frankly, what we'd see if they did acknowledge was a knee-jerk reaction, probably lower in the stock market, but then ultimately you'd see a stabilization because the message would be, we're in control of inflation.
I just want to sort of think about what's happening today and just think about how people are going to be positioned. I got a VIX at 25. I've got European and US equity markets accelerating to the downside right now. We're at session lows. Where are my hedging options? Where can I still hedge? Where can I hedge at decent value? What are my options in terms of covering myself if I haven't done that already?
Sure. We think, as we've thought for a number of weeks, that in a market that's rotating as much as it has, the themes that we like very long term, and some of them are value based, we continue to think that's a long term thing. But when you look at an area like the transportation averages, which are now feeling the heat based on this idea that excessive inflation could crimp economic activity, those are the places where we think that option protection still makes sense.
In terms of the downside action, we are hitting some key technical levels. Julian, it always happens when we have big days like this. So what are you watching into the close in terms of how we close and then what kind of action we could see?
So again, it's all in response to that 2 o'clock report. The obvious levels are reasonably far away. Still, essentially 4,000 on the downside in SPX, and then the 200-day moving average currently a shade over 3,700. We would be surprised if the market didn't challenge 4,000, regardless of what the Fed says. And then we'll see. For us, it is no surprise today that the only place money seems to be flowing right now is gold.